Hey guys, what's up? How's it going? My name is Robin. Welcome back once again to the channel. In today's video, I'm going to be doing a very thorough update of my Canadian dividend-based portfolio. I haven't done one of these videos for quite a while, so I figured it'd be a nice time to do one, especially going into the new year. So in today's video, I'll be covering all the stocks I own inside my portfolio. I'll be showing you guys my holdings. I'll show you guys how well they've been doing since we first started the portfolio. And we did start this portfolio back in 2020 of January, so it's almost about, I'd say, a little bit over a year now. So it's going to be interesting to kind of compare and see how this portfolio has grown over the past year, especially considering all things that have been going on. So once again, the format of this video is going to be pretty simple. We'll do a quick little update on the monthly dividend income so I can show you guys how much monthly income the portfolio is making on a regular basis, and then we're going to jump inside the portfolio itself and I'll show you guys all the good stuff that you want to see. So once again, guys, if you guys enjoyed this video, please do me a big favor and smash that like button. And if you guys want to follow along with me as I build this portfolio and I invest in these Canadian stocks, be sure to subscribe to the channel. So that's it today. That's it for this quick little introductory, guys. Let's jump inside the spreadsheet and let's see how the monthly income for the portfolio has been doing. Alright guys, so before we go inside the portfolio for today and I give you guys a quick little update on things, I'm just going to go over the dividends, on the monthly dividends, because I know everybody likes to see how much money the portfolio has made. And I think it's important also as a dividend investor to see that compound interest and those dividends grow over time. So this is a spreadsheet that I use to track my dividends, as most of you guys know. Just pretty simple sheet here. We have each month that we started investing, and we started investing in January 2020. We have each month that we kind of been growing the portfolio. We have the dividends earned, and that's pretty much the only thing I'm really tracking. We have the monthly contributions, which I'm trying to kind of track the best I can. It's a little bit hard because I do have the Wealthsimple trade referrals that go in automatically. So some of this, it's not 100%, but I do my best to try to track deposits and whatnot. But the main thing I'm really focusing on are the dividends, and like I said, like the month we have here. So as you guys can see, when we first started the portfolio, it was pretty low and wasn't very much, but then going towards the end here, things really starting to pick up, getting like $40 a month, $30 a month, $50 a month in December, and January already at, we're about mid-January and already at $32 a month. So as you guys can see, it's starting to grow, and that money will keep growing as time goes on. And like I said, the other thing I like to track is the monthly dividend here and the total dividend. So the total dividends for the entire portfolio is about $300-ish. We just broke $300 after 1 year for the portfolio. And then going towards the bottom here, I have this little spreadsheet which I've been tracking different things and kind of basically saying to myself, if I make $50 a month or $54 a month, as this has been growing, we've been kind of like saying to ourselves, okay, like what can we buy with that money to make our lives easier? Could be like our daily cup of coffee, could be some of our groceries, could be some different things like this that we use in our life. And the whole purpose of this portfolio for 2021 was basically to get to the point where I could pay for all my essentials with dividend investing and then eventually just grow from there. So I got some things here. I like to kind of do updates on every single video as I do more videos on the channel. I like to talk about these different things. I'm not going to talk too much about this stuff today, as going in the future I'm going to talk about more of the stuff, but these are just little simple things I've been adding to my life using my dividends, and once again just using that representative, like if I was to retire, or when we eventually retire, or if we're going to be living off our dividend income, what can we get with our dividend income? And that's kind of like this little case study that we've been doing. So once again, I talk about that more in some of the other videos, but I'm just going to kind of mention it in today's video. So I just want to let you guys know that I got that going on too. So anyways, guys, let's jump inside the portfolio and let's actually take a peek at my stocks and how they're doing in the markets. Alright guys, what's up? We're inside the portfolio Wealthsimple trade, and in today's video, like I mentioned earlier, we're going to be covering some different changes going on in the portfolio. I'm going to do a quick little recap on how things have been doing lately and talk about the Canadian stock market, because the market over the past couple days has been pretty quite well. It's been trending upwards, and we've already seen some increases to start in 2021, which once again we're going to talk about because there's lots of things to talk about today. So it's Friday morning, it's 11 a.m. The market's just opened up, so here's a quick little recap on how stocks have been doing today, and then we'll cover the previous months and whatnot. So for today, we can see the stock market opened up at a little bit of a high, but we're kind of actually a little bit on the low side. Currently negative 7% over the day, but that could probably change throughout the day. Anyways, doesn't really matter. Over the past week, we are up 1%, which is $177. So you guys can see that overall, our portfolio, which is invested in the overall Canadian stock market, is actually up quite a bit, 1%, which is $177, which is pretty nice. And over the past month, we are up 3% inside the portfolio, which is $469, almost $500 just in 1 month is pretty good when you have a portfolio of only $16,000. And in the past 3 months, we are up 8%, which is $1,174, up quite a bit. And then all time, if we go once again, it shows us 8%. Now, in reality, this portfolio is probably at more closer to like 13 to 14% because it didn't track our REITs, which gained a lot of value in early 2020 since we combined that portfolio into the TFSA. But just kind of keep that in mind, we're actually up around closer to $2,000 since we started this portfolio in early 2020. But of course, because we combined the two portfolios together, it's actually not showing that. So just want to point that out really quickly. And in today's video, I'm going to be selling some stocks. I'm not going to be selling any Canadian stocks. I'm just going to be selling some ETFs that I've been wanting to unload for quite a while now. I'm going to talk about some of the Canadian stocks that have done quite well here. So as you guys can see, overall, most of our stocks all time are up quite a bit. If you look at the all-time return here on the right side, you guys can see here that this little number right here, this dollar sign basically shows us what the dollar amount is, whether it's down negative or up all time. And then underneath here, we have the percentage of, is it negative all time or positive? And you guys can see here's the different companies. So we have Algonquin Power and Utilities. This one is down at negative 1%. We bought this one towards the end of last year, and I've been slowly buying it over time. CNR is, we recently just started buying the stock. I've been looking into CNR. It's actually a really, really good stock, really good dividend growth stock. And it's been kind of just growing, but we just recently, once again, did buy it. Very interesting stock lately has been Enbridge. Enbridge has been up about, I actually checked this today and was surprised to see it was up like 8% in my portfolio. So if you go over the past week here on Wealthsimple Trade, we can see it's actually up 6.21%. Lots of increases coming, I guess, in the past day or the past couple days. Actually, we can see a nice trend upwards. So that's very interesting. A lot of people, over the past little while have been buying Enbridge, just because it's a good, solid company. But, Enbridge is kind of a weird company because they have a lot of high debt and stuff like that. But a lot of people have been saying, it's going to go up and it's going to do well. And it looks like it's actually might be recovering. So that might be something interesting to maybe look into. But it's still down 15% over the past year. So just interesting to look at when, if you buy a stock when it's low. It doesn't need to go up a lot, especially if it's like a regular dividend stock, because, those dividend stocks go back into the stock when it's at a very, very low price. Next up we have is Fortis, where we're down negative 2%. Once again, we've slowly been buying this last year. Probably will be buying a little bit more Fortis this year. Next up we have is H&R REIT. This is one of the big REITs I bought, and the big reason why I'm buying it is because it's down so hard. H&R REIT is down I think about 40% over the last year, as you guys can see. A little bit of recovery going towards the end of 2020, this is when we sold it to move it into the TFSA. But it's kind of been trending downwards ever since. So I still think it's a good REIT to buy. Just understand that there is risks with it, and we'll have to see if the recovery comes this year. I think it will recover towards maybe the middle to the end of the year. We should see some good gains, and we still get that monthly dividends, but we'll just have to kind of see. Manulife is another stock I hold, up 16%. I'm doing really, really well. Once again, I've been buying this ever since 2020 because it just got hit really hard and it had a very slow recovery, and it's just a good Canadian dividend-based stock. Currently down still, once again, 10% over last year, but we've seen that consistent recovery. So I think this one's still a pretty good buy, and I will be buying this quite a bit because, like I said, it's still down 10%, and it's just consistent recovery. Company's been doing quite well over the past year, surprisingly. Everything, all things considered, kind of thing. Next up we have is RioCan, and RioCan is once again one of those REITs that have been doing okay. It's doing a little bit better than H&R REIT, but it's still kind of hit pretty hard. That dividend cut is going to come in, I think, next month, when the next month distribution. So it's going to be interesting to see what happens with the stock price once that dividend cut comes in. But I'm still going to be buying RioCan on a regular basis. We are currently up 1%. It's like I said, it's slowly kind of recovering over time, and that monthly dividend will go back into the stock. And I think if you consistently buy into stock, you should see gains, and that stock appreciation should recover probably this year or maybe next year, or probably like a slow rise, and you should see some significant gains with a nice monthly dividend yield. So RioCan I still think is a pretty good stock to buy if you want like a nice good dividend yield stock. Just understand that there is once again a little bit of risk with those REITs at the end of the day. Alright, so the next one we're going to talk about is TransAlta Renewables. This is a renewable-based energy company. I bought this way back in 2020, and no one really knew that renewables. People were kind of predicting, going in the future, renewable energy sources are going to be, the way of the future, and it makes sense because we're transitioning into that. But it's kind of interesting because I don't think anybody really would have guessed that the stock would have done as well as it has, and it's very interesting because the company has been doing okay, but not like crazy good. So the stock price is, it's kind of interesting that it went up this much, and I think a lot of people are surprised. I think we should see it kind of go down a little bit, but it still might, going into the future over the next couple of years, generally trend upwards, and I think it will. It's still pretty cheap. It's just, I think maybe in the short term, this 40% gain will probably go down a little bit. Nonetheless, I still think long term, like if they keep going the way they're going, they should continue to grow, and they should be a nice little company. And like I said, we have $464 inside our portfolio, up 40%, which is absolutely crazy. Never really predicted it was going to do that well. I just kind of slowly bought into it over time just to kind of diversify the portfolio, and it did pretty well. So that's a nice little gain that stock has had. Next up we have is Severia Corp. This is a healthcare-based Canadian company, up almost 11% here in our portfolio. It's been up and down over the past year, and it seems to be doing pretty good. If you go over the past year, it's up 8%. Over the past 5 years, they're up 211%. So actually the company's grown quite well. It's a monthly dividend-based company, so it's a very interesting company, and I haven't bought them lately, but I probably will, as they've just kind of consistently done well. And once again, it's a nice diversification side of the portfolio because I don't really have a lot of healthcare based stuff. So I think this is definitely one I'm going to look at more further going into 2021. All right, so moving onward, we have one of the most popular Canadian companies of all time, and that is Shaw Communications. So Shaw Communications has been a very interesting company. They've kind of haven't performed the greatest, but just like a company like Enbridge, their past couple years performance hasn't been that great, but that could signal that it could be a good stock to buy. But once again, it's kind of risky because when stocks are down, like kind of going downwards, you never know if they're going to really recover in the future, and you don't really know if that recovery is going to be worth it in the long run, right? Is it worth buying a company when it's down right now so it'll grow in the future, or is it just worth buying a company that's consistently growing? Like, I'm always a big fan of the consistently growing companies, but Shaw Communications, in the past has been a good Canadian company, but like if you look at the past 5 years here, it's down 7%, just not looking well. Now this could be a good opportunity to buy if you think the company is going to do well, but once again, there's always that risk with that company. And since investing in this company in 2020, I started building this portfolio in January 2020. This was the first stock I bought inside this portfolio, and it just has not really performed well, and I haven't been buying too much of it. I do hold it in the ETFs that I'm going to talk about as we get down towards the bottom of the portfolio, but I don't think I'm going to be buying any individual shares. Even though it is like a nice monthly dividend stock, the growth just isn't there. But once again, with the stock price being so low and going downwards, it could recover in the future and be worth a really good buy, kind of like an Enbridge case scenario, but I don't think the company is as good as Enbridge, so it's in a rough spot, right? Next up we have is TELUS, which is kind of like the opposite. Like I mentioned, we have Shaw Communications, which is that stock that's going downwards. Here we have TELUS Corp, which is just consistently growing on a yearly basis. We look right here, TELUS is currently up over the year, it's up 4% already for this year, and if we go over the past 5 years, it's up 41%. So if we look at and we take away I guess 2020's return, TELUS would be sitting at about a 10% average return over the past 5 years, right? Because 2020 was basically, I guess it got like a zero return. Like it dropped, obviously, as you guys can see, but going towards the end of the year, it pretty much just finished at the same price it was, kind of deal. So if you invest in the company throughout 2020, you would have gotten gains. You probably would have grew whatever the money you put in over 10%. So over the past 5 year return, we're looking more at a 10% gain if we get rid of 2021 kind of thing. So TELUS is kind of, like, in my opinion, just the better growing company, and they do have better dividend growth as well. So it's kind of interesting, right, when you look at two companies like that. But we currently have about where is it here? We have 9 shares with $236, so not that much, but once again, this is a big holding in some of the big ETFs, but we are up 5%, and this has had some pretty good growth over the past couple months, so it's done quite well. And going forward with the video, we have the last individual stock inside the portfolio, and that is TD Bank Stock. This is my favorite bank stock of all time. TD is just a long-term growth, stock appreciation, and in regards to dividend growth, just a company that's consistently growing across the board, and this is what I like to see. It's one of the best Canadian banks, and we go over the past year, TD is currently up about 2% over the year, so we're starting into 2021, it's up 2%, so good signs overall. We see that nice growth. If you look, since the pandemic, the stock has just consistently grown, and towards the end of 2020, it's just done really well, and this is kind of predicted. When you invest in a good quality companies, you're just guaranteed that growth because that's what they do. They just keep growing. So the past 5 years, TD, once again, if we were to kind of get rid of 2020, it'd be up consistently about 10% per year on average, plus the dividend growth, plus reinvesting those dividends, blah, 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 blah. So even with just share price alone, it'd be up quite a bit. So it's a pretty consistently good stock. We have 25 shares. It's my biggest holding when it comes to individual stocks, sitting at about 11% of the portfolio, which I plan on actually buying even more. Currently up about 12%, which is really, really cool, and $200 up all-time performance. So this is one of my favorite stocks of all time, specifically Canadian stocks, and it's going to do well. So that's all the individual stocks inside the portfolio. And one of the things going into the new year is I want to focus on adding some more individual stocks, because we currently have about, let's see here, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 stocks, individual stocks. So that's actually not that many. It's kind of like in the middle. Like you kind of want to look for, depending on how big your portfolio is, maybe 10 to 20 individual stocks. And obviously as your portfolio gets bigger, you want to add kind of more. But because I have so many ETFs anyways, I don't really care. So I'm looking to add some more dividend-based stocks, Canadian-based stocks. And I'm going to be looking for some good dividend growth stocks. And I'm going to be looking for some ones that are in some different sectors that I don't really hold, to just get some more diversification and have some more fun with the portfolio. Because at the end of the day, the bulk of the money goes into the ETFs, so I'm kind of just covered anyways. So if I just pick crappy stocks, at least my ETFs will get me through. So the two main ETFs are VDY, which is the Vanguard Canadian High Dividend Yield Index. This is all the big Canadian dividend stocks into one ETF, and this is like the broader Canadian dividend market. This holds like all the banks, Enbridge, all those utility companies, all those big Canadian companies that Canada is known for, to have those good dividend-based companies. Over the past year, it's still down 2%, so it's still down quite a bit. I still think it's a great ETF to invest into. Just shows how like the Canadian market got hit really bad, and even though it's recovered quite well, especially going towards the end of 2020, as we've seen that consistent recovery, it's still down quite a bit. So I still think there's some pretty good growth, and it's up 35% over the past year, which is pretty good. Once again, 2020 really pushing that return down, and I think the average is about 8 to 10%. So it's pretty good returns. We are currently up 9.4% since we started investing it earlier in 2020. And this does have a nice monthly dividend. We get that monthly dividend from VDY that comes in every single month. And it is 25% of the portfolio. I'm looking to make it about 20 to 30%, depending on how things go. So once again, having the bulk of the portfolio in an ETF, just to kind of, as over time the market grows, we grow with that. And on the flip side, to add some more diversification and to add some growth inside the portfolio, which is important, I added VFE, which is a Vanguard S&P 500 US index. We can see over the past year it's up 12%. So just ever since the market crash in 2020, it's just been consistently growing, and that's what these US growth-based ETFs do. They just consistently grow. Over the past 5 years, up 77%, just consistently grows. So very, very good ETF to hold into your portfolio for growth. We started buying it, I think, about a month ago, and it's already up about 2%ish. So it's just, once again, consistent growth. It's got a quarterly dividend, and we have about 20% of the portfolio, which is pretty high. But once again, I do want to get that growth inside the portfolio. I do want to get this to about 30-40%. So we have 40% US stocks, maybe 30% of VDY. So that's 50, 60, 70. And that leaves us about 20 to 30% to kind of play with our own stocks, which will be, once again, Canadian stocks, because it isn't a TFSA. So the cool thing about this ETF is it is traded in Canadian dollars, and this is important to talk about because with Wealthsimple Trade and even other online brokerages, you get charged for conversion fees. So if you buy any funds in USD, as we'll talk about when you get at the bottom of this portfolio, as you can see, you get charged conversion rates. And if you get paid dividends, depending on the fund, you can get charged conversion rates, and if you sell. So when you're buying stocks, especially with Wealthsimple Trade, or even if you're using like Questrade or something, if you can buy them in Canadian, or if it's Canadian hedged in some way, it can really cut down on those conversion fees. So when you buy VFE, we're buying US stocks, we're buying it in Canadian dollars, so we're not getting hit with conversion fees. Very important. When you look at the two ETFs at the bottom here, these ETFs I bought way back in the day when I didn't know that. I didn't know that USD, we got hit with the conversion fees. So we look at VYM, which is a Vanguard-based high dividend yield index ETF, US-based. It's actually a really good fund. The problem is it's paid in USD. So whenever we buy it, we're charged a USD conversion rate. Whenever we sell it, we're charged a USD conversion rate. Whenever you get a dividend, once again, we're charged USD conversion rate. So it really adds up over time, and it can be anywhere between 1 to 2%. So, and it's just a pain in the butt to have to pay those fees over and over. So one of the things I wanted to do was sell this ETF kind of once it got up, and then just stick it into another US market. based ETF, which would be VFV. So we can see it's up 11%. So absolutely crazy good growth. It's great, but we're getting charged fees with it all the time. So I'm going to be selling this today because it's up quite a bit, and we currently have about 3 shares. So we'll sell the 3 shares, and I'm going to put those shares, which is about $286, into VFE. Now keep in mind, we're going to be charged a conversion rate on this. So this is why I want to get rid of this. You can see it right here, includes the 1.5% fee. So that's what we're getting charged. So once again, it might not seem like much right now, but over time, as you're constantly buying, and you're getting those dividends, it does add up. So definitely going to be getting rid of that one. And now that it's up, I can feel comfortable of selling because we made some money. 11% gain off that isn't too shabby. And then we'll take that, stick that into, let's just see here. I'm just going to refresh the page here so we can see our available to trade value get updated. All right, so as you guys can see, the portfolio value is updating. We have $633, so it's about $300, right? Wasn't it, or something like that I had? So we're going to take that. We're going to put that in the VFE. We'll buy about $300. Let's go 1, 2. We'll buy 3 shares, which is about $257, close enough. And that will kind of put that into VFE. So that's something I want to do for a while, just to move the fund out of there. And then the other one we have that's paid in USD is an international fund, VYMI, and this is one I've wanted to move for a while, but it has been growing over the past couple days, so I don't really want to sell it yet because I think it might grow a little bit. We can see over the past day it's up 1%, over the past week it's up about 2%, over the past month it's up 5%, so I might hold on to this just for a little bit longer, even though we're getting charged fees with it. It looks like the international stocks are starting to kind of rise up, and we've seen that in my Wealthsimple Invest account, like some of those foreign-based ETFs are starting to rise, and I kind of predicted this because, you know, the past 2 years for them have been really rough. Kind of expecting them to kind of have their good growth year coming up. And then we have XRE at the bottom with a Canadian-based REIT that I'm going to eventually sell going into the future because that one, I don't need the REIT anymore. I want to buy individual REITs, but once again, it's down 5%, so it'd be kind of silly to sell. We'll wait till REITs, you know, get their nice big jump up, and then maybe we can sell it once it's doing quite well. So that's a quick little, I shouldn't say a quick little recap, but a nice little dive into my portfolio and kind of give you guys a quick little update on how some of those stocks are doing and why I hold them inside my portfolio. So I'm just going to do a quick little refresh here so our totals get updated once again, and we can see how much we're going to be buying today. Just kind of refresh the page here. It's a little bit slow today. There we go. So we have $363. I'm going to be spending about $100 on Manulife today. I think that's a stock I'm going to buy. Once again, I still think it's a good stock. I'm going to spend about $100 on Manulife because once again, like I mentioned earlier, it's still down quite a bit. Still down 10%, and we've seen consistent growth. I think it's going to keep growing. So let's buy about $100 on Manulife, and we'll stick that in and add that inside the portfolio. We'll buy Manulife. And I think that's the stock I'm going to buy today. I don't think I'm going to really buy anything else. I could buy some TD. That probably would be a good stock to buy. In fact, I think I will. I might buy like one, not TELUS, I want TD. I'm going to buy like 1 share of TD, and I think that's going to end today's video. So we'll just put that through really quickly, guys, and do that. And we'll go back to the portfolio, and I'll hit refresh. And before we end the video, we'll do a quick little update on the dividend portfolio. We'll look over the monthly income for any of you guys who are interested in how much money the portfolio has made. And by the way, guys, I've been super busy with the channel and some other things, so I know I haven't been as active in the comment section, so I do apologize for that. And my videos have been a little bit like published on a random basis, but it's just because I've been really busy lately. So I'm hoping to get back into a regular publishing kind of schedule, maybe over the next couple days to next week or so. So sorry for that kind of like random publishing, but anyways, guys, I hope you guys enjoyed the video. Hope you guys enjoy your weekend. By the time you guys watch this, it's probably gonna be Saturday because I'm probably not gonna have it uploaded for Friday. But anyways, guys, let me know what you guys think of the video. Let me know how your dividend stocks are doing, and I'll see you guys later.